When it's time to start your business, it's time for Shopify. Design with easy to customize themes.
Okay, good evening, everybody. Before we do anything, let me just get a quick mic check. Make sure you guys can hear me okay. If somebody could just say yes in the chat, that would be helpful. Got a thumbs up. That might work. Okay, great. Fantastic. Steve, I think you guys said that you're recording on the YouTube side, so I don't have to, or do you want me to record as well? Okay, perfect. All right, so welcome everybody. Thank you for showing up on a Wednesday evening. I appreciate it, as does Steve, I'm sure. We're going to go over a bit of just market review, talking about what we have going on. Obviously, with the new administration coming in, and people that know me know I try to keep politics out of things as much as possible, but we do have certain activities that we need to talk about because they do affect the market. And so I try to do this in without offending people that have voted either way. Being Canadian, I didn't vote for any of them, so um, I don't really have a bias. I'm only interested in the impact it has on the market. So when we talk about this stuff, it's just from a market viewpoint. But some of those things are important because with the new administration coming in, obviously, anytime a new administration comes in, there's a lot of changes that happen, and that just adds on a lot of volatility to the market on top of what else is going on. So some of that stuff will come up. I'm going to review the major indexes, or generally, um, I'll actually look over the ETF associated with the index, but that doesn't really make a big difference. I've got a few other things that I want to talk about around the sectors, the way the market's moving, the way the market appears that it's moving, and a little bit of forward looking into what I'm anticipating over the next, um, at least the next quarter. Maybe we'll talk a little bit further than that. I wanted to make sure that this was an opportunity for people to ask questions. And so I had mentioned that kind of an AMA style. If there's anything at all that you guys want to ask about, feel free to just put questions and stuff into the chat. Once I'm done at least reviewing the indexes and stuff, then I'll go over and I'll start looking at those questions. And then on top of that, then we'll talk about if there are particular stocks that you guys want to see a bit of an analysis on, then I can go over that stuff as well. I think that covers everything. All right, so let's get started. I've got SPY up on the charts. So the movement that we've been seeing in SPY has been, I mean, first of all, overall, it's been fairly bullish. It hasn't been moving at a super fast rate, but if we kind of back up a little bit and review this, we're a lot choppier, and we have been since well, really since December, the middle of December. Things really started to get more choppy, even though they are continuing to the upside. Um, the well, I'll try to say it as simply as possible. There hit a point where Trump started talking about changes that he was going to start putting in. Real, where he had just talked about campaign promises. Now he was talking about real things. Some of them were a little bit shocking to some people. Shocking's a little bit maybe extreme, but it kind of caught people off guard a little bit, and there was some market reaction to some of it. Um, but we also had on the other side of it, there were things that he's talked about that um, have helped push the market back up. And so all the dips that we've been seeing, at least my anticipation of it has always been that we're going to see some dips. There are various things that are going to happen that are going to cause that, but I don't expect those to last. I have certain areas that I'm watching to say if we get to these types of situations, that's where I'll start becoming more concerned about them. But until then, every time I see a dip happening in the market overall, I'm expecting that it's going to be short term and things are going to come back and things are going to keep pushing up. I mean, here's the big spoiler. My anticipation is that 2025, one way or another, is actually going to be a really good year for the market. It may go through some hardship either in the first or second quarter, but I feel that things will be much more locked in by the third and fourth quarter, and then it's actually going to do very well. Even the first two, it might not be such a rough ride, but obviously, um, when we hear things like lots of people working for the federal government getting laid off, I mean, anytime people talk about large layoffs, it always puts a little fear in everybody's heart. And so we may see some reaction to that. Um, some statements that we hear uh, where Trump talked about, as an example, he talked about interest rates. He wants interest rates brought down. The Federal Reserve is saying that's not really what we want to do at this point. And so when there's um, a disconnect between the two, those sort of things also make people a little bit edgy when it comes to the stock market. So we'll still see some of those activities. On the bigger side, um, when he announced 25% tariffs for Canada and Mexico, that was a big deal. A lot of companies said, "Hey, that's going to wreck our company. That's really going to cause us a problem if that happens." Um, and that sort of activity has really pushed the market down. But again, it recovered mostly because, at least in those particular cases, it really seemed more like a negotiating tactic, kind of like slamming your fist down on a table in a meeting just to make sure everybody's listening and they're sure that you're serious. So overall, I think things are going to continue up, even though we may have some periods of some drawbacks. I don't think we're going to get into a very bearish market. I know there are a lot of people online talking about, hey, empty out your 401k, go all cash, buy Bitcoin, get into gold, something else. I don't feel that way whatsoever. I think we're going to have a lot of great opportunities. So SPY in particular, we have been pushing up, and we don't have any sort of catalyst. And I talked about this with the AC&I people on the weekend, or the video I created over the weekend. Um, there hasn't been any big catalyst to truly bring the market down. We're getting little things happen that it drops a little bit, but then it just recovers. We keep making every couple of days, we get back and make the all-time high a little bit further up. We're not we're not breaking through it and running up incredibly high or incredibly fast, but we are trending that way. We keep chipping away at that all-time high, pushing it up higher and higher and higher. Um, so without some sort of big catalyst, we're going to continue with that push up. The only thing is, we do have several areas of these zones that you see, these colored zones. For now, I'll just refer to them as support and resistance areas. So we've got areas where we're going to see what I would call resistance in those spots. And if we can't get um, something to help push up, some sort of bullish catalyst to push through, it could be difficult to get in through those areas. And if that doesn't happen and we don't push through quick enough, what's going to happen is that buyers are going to lose steam, and eventually your sellers are going to take over, and we're going to drive this back down again. Now, when I say back down, like I said before, uh, I'm not talking about getting into a bullish market and everything coming crashing down. But we could reject, oscillate down for a little bit, and then turn around. We've got several levels that, if it does start coming down, let me just. This is going to get a little messy because I have a lot of stuff in here, but these are basically all levels. Um, so this area in here. So that was 605.33. We've got another area around 600. We've got more down here at 595. Big area down here. And even beyond that, I would even look at here. Every one of these levels, if the price was coming down from 605 all the way down to 573, it doesn't bother me if the price is coming down into those areas. At each one of these levels that I just marked off, I'll be looking for the potential bounce in those areas. I won't become concerned about SPY. So I'm just going to clean these back up now because I don't need them. The only way that would happen would be if this comes all the way down to somewhere in this area, then it comes back up roughly around here back up to 600 and then starts pushing back down again. This would be my first signal. A move like this would be the first area that I would have any concern. Um, for major concern, this would actually have to come down, break through these zones, and then it would have to come back up. Just let me reset all these like this. So I'm going to draw very, very horribly here. But let's say these sort of continue something like this. So if the price came down through those zones, came back up and retested those zones as resistance and then rejected and came back down, this would be the first place that I would have major concerns about what was going on with the market. Until something like that happens, I'm still looking for bullish opportunities, areas for it to bounce and for us to continue to the upside. Um, So other than that, if we don't get a catalyst to the downside, we don't get a catalyst to the upside, my anticipation is that SPY overall is going to continue to melt up. Um, One particular thing that I have been looking at, because within the S&P 500, I've been wondering about what's um, what's actually moving within the S&P and what isn't. And so two things I want to look at very quickly. The first one is I want to do a comparison of RSP. Let's go to a new price scale. And we're going to put that price scale. Sorry, just one second. Let me reset this. There we go. I don't know why that's not coming up, but oh, sorry. I know why. There we go. Okay, so RSP is this reddish kind of line that we see going through here. RSP is it's an ETF of the S&P 500, but it's not weighted. So normally the S&P, if you're not familiar, all the stocks in it are not weighted equally. Some of them get more weight than others. In fact, let me pull this up right here. This is a list of the S&P 500 stocks listed by weight, meaning that even though like equal weighting would mean that, let's say I had $500, I would put $1 into each one of the stocks in the S&P 500. But that's not the way it works. Apple is the highest weighted. It's weighted at 7%. So 7% of the entire S&P is just Apple. If you look at the top 10 stocks, Apple, Nvidia, Microsoft, Amazon, Meta, um, Google's actually in here twice. Yeah, here's the other one down here. You've got Alphabet, A class and C class, Broadcom, Tesla, Berkshire, JP Morgan. Oh, JP Morgan's dropped off the list now. I think Tesla actually came up and pushed them down. Those 10 stocks make up about 30% of the S&P 500. And so because of that, when those guys move, they can make SPY move much quicker than other stocks. As a matter of fact, sometimes, and kind of in the scenario we've got now, what we get is that those heavily weighted stocks, if they happen to be outperforming, then they can actually drive things higher. So when we look at what SPY was doing versus RSP, the two of them had been climbing through all 2024. We had these dips where you could see that as a percentage movement, you could see that RSP was more heavily affected than the S&P. You could see the bigger dips that happened. And on the recovery, RSP, so the stock market as a whole, all the stocks within the stock market have not recovered to the level that the S&P makes it look like it did. It's just because those heavily weighted stocks have been doing super duper good. and they've been pushing it up higher. And that's why we have the new all-time highs in the S&P, when in fact the overall market is not making new highs, as we can see here. So we're getting a little bit fooled by this. Now, is that a major concern? No, not really. But what we do want to watch for is how the overall market is moving. And so I generally, from time to time, every couple of months, I'll take a look at RSP and what it's doing, because if I don't remember how to do this. I think that, yeah. So if RSP is coming down like this, comes back up to this level to a lower high, and then continues down, that's a much more bearish activity than in the case of the S&P, where we came up to a new all-time high. If the S&P comes down from here, generally what I would look for is high or low continuation to the upside. So it's not super duper important, and it's not going to affect your day-to-day trading, but this is something to be aware of and keep an eye out for. So let's take a look at a couple of the other indexes. The next one I want to take a look at is QQQ. Guess I could put this stuff back in here. And we don't need RSP in there. He doesn't matter now. So we're seeing the same sort of stuff in the Qs. And obviously the Qs and the S&P share a lot of all those big stocks. Those top 10 stocks, about 8 of the top 10 are all NASDAQ stocks. So um, they're going to cause these two indexes to perform close to each other. Not all the time, but they often run together and look similar in the way they move. Um, so the same thing I said for SPY, the Qs are running into some areas of resistance, and uh, less important is the individual stock performance at this point, and more about what's going on with the markets as a whole. We've got a lot of geopolitical stuff that's going on that can affect these things. Like we said, talking about tariffs, but there's also, we're talking about peace negotiations between Russia and Ukraine. Those sort of things can have impacts on this stuff as well. Probably the biggest one, not so much related to the Nasdaq, but um, if we play this out, if there are negotiations for peace between Russia and Ukraine, however it goes, the thing works out, and everybody's all, I don't want to say okay, but we find peace between the two countries, and no one's getting killed anymore. Well, one of the things that happens at that point is that all the sanctions on Russia disappear. All of a sudden, you've got Russian oil now flooding back into the market, which is great, especially for Europe. They've been suffering horribly because Europe was getting a lot of Russian oil, and when they had to change where they were getting the oil from, that meant the prices went up significantly for them. So if they can start getting that oil again, it's going to come in, it's going to make all the prices come down. And so that would have an impact on oil globally. I expect that OPEC over a short amount of time will start to get that more under control. They're very good about um, reducing production when necessary to stabilize pricing. Um, but those sort of things around the world have an impact. So we want to keep an eye out for them. Um, so like I said about SPY, I expect that these things are going to continue to melt up as long as we don't get some sort of bearish catalyst that's going to start bringing things down. And again, like SPY, for it to have any momentum to move from here, because it's running into these resistance areas, it would need some sort of big catalyst to get a big push to break through there so it could start moving at a faster rate. There has been, it's very slight, but if you look at the rate of climb previously through 2023 and 2024, in the last couple of months, NASDAQ has slowed down a bit. It's kind of expected, but we need to get, all these things that are making people question, is this good, is this bad? We need to get through those things so that we can get some momentum and start pushing through this stuff to get back to the normal climb. If I do wrong line, this one. If I do a quick, let me zoom this in so we can see this a little better. If I look at just the past, let's go back to the start of November, end of October, around here, just for so everything that happened after the election. This is basically the rate at which this linear regression is kind of the rate at which things have been growing. When we compare that to um, we'll take the period just prior to that, about the same amount of time, and you can see that there was it's a sharper rate of climb. So we want to get back to that. I know it, when you look at it as a really big, sorry, just let me get rid of these. When you look at this as a really big line, you'll say, yeah, well, it's pretty much moving the same way, but that growth difference is noticeable. Same thing here. There was this big spike here. If you think about it, this was back when we were first talking about all the AI stuff, and that was the big push related to that. Getting back to this overall would be fantastic, but I think getting back to what I just showed you before would be a little more normal. Not that the Nasdaq is suffering from the rate that it's climbing right now, but we want to get something a little smoother, a little more consistent. Switching over to the Dow Jones Industrial Average. Dow Jones is not like the Qs, hasn't quite pushed up to new all-time highs, but it is sitting in that area. And so it's the same story with this. We're seeing growth. We're seeing continuation to the upside. I expect that we will continue to melt up without any sort of catalyst coming in. And we're going to need either a bullish catalyst to make this really push up through resistance, or we're going to need a bearish catalyst to make it really come down. There are a couple of areas there. There are a few areas within these industrials that can be affected. Again, going back to the potential for tariffs coming in. This is one of the areas that would get highly affected because of the international manufacturing is very, very complicated. It's not just about something getting made in a particular country. There's a lot of component manufacturing that happens across different countries. Some countries import pieces so that they can make a bigger product. So all of those things could get impacted for, we've heard about the potential for tariffs for cars, tariffs for semiconductors, a few other things. So all of those, there's potential there. So this could be, if any of that stuff happens, one of the first places that we might see an impact from those. So I'd be watching, not that I personally trade a lot of stuff that's in the Dow Jones, but this is one of the areas that I would be watching for. And then the last index that I want to take a quick look at is IWM. You can see that IWM hasn't come back up nearly as strong as the others. And this is to be expected because IWM is made up of your small caps. And as an institutional investor, generally you're looking at small caps as your riskier, the riskier part of your account. You have a part of your portfolio that you're willing to take a little more risk on, but that is generally driven by the overall market. So if you have strong feelings that the market overall is doing well and you anticipate that's going to last for a while, then you feel a little more comfortable to lean a little more into your riskier trades. And that would be your small caps. When things start to get questionable and there's uncertainty in the markets, you tend to withdraw from that. So we had the whole push up until around the election, and now that we've got a lot more uncertainty, which I think is short term. But for now, we've got that uncertainty. And so we're not seeing the same push from the small caps because institutional investors are not willing to take on the additional risk right now. They want to see how things play out, and then they can make some decisions around that. So I would expect that IWM is moving like this. Um, oh yeah. So two other things that I want to show you, and then we can get into any questions. Matter of fact, if you have questions and stuff, if you want to start putting them into the chat, and I'll get to those as well right after I explain these last two things. So the first one is I want to talk about sectors. So this mess, there we go. This is these are all the different sectors within the S&P, and I've got them all plotted out separately. They're all plotted as a percent ratio of change. So what I'm going to do is I'm going to move this up until the beginning of November. And we just want to take a look at how things have been moving um, relevant to themselves over the past couple of months to kind of see where we're at. Where did I? I'm just getting this to, yeah, right around, okay, that'll be good there. So this is basically from around the time of the election till now. And you see some things like this orange line down here, this is, just let me make sure I've got that. Yeah, so that's GDX. GDX I'm using as a representation of gold in particular, precious metals in general. It's not actually one of the sectors of the S&P, but I like to track it as well. So you can see that gold took a dip right after the election a couple of times, but now it's been pushing back up. So it's about flat from where it was. On the extreme, we have XLY, which is consumer discretionary spending. And that's had the biggest change, 13%. So this is discretionary as in like your well, it's not the staples. It's the stuff that you don't need, but you'd like to have. This is generally regarded as people, when people have more money to spend, then, um, then a lot more of it goes into discretionary spending. Your, your staples, that's the stuff that's, you know, toilet paper and groceries and those sort of things. They, those are the things that people, no matter what the economy is doing, more or less people always need to be buying those things. Um, so yeah, like I said, at the top end, we've got discretionary spending up about 13%. Down at the bottom, we have VNQ, which is my placeholder for real estate, and that's sitting at about minus 4%. So you can see here looking at this that we're averaging in somewhere around 4 or 5%. So 5% growth over the past, let's call it 3 months. So 5% in a quarter on average is actually really good growth. Now, obviously, not every sector is doing that, and so on the low end, we've got, like I said, we have VNQ, we've got healthcare. Let me just double check that that is healthcare. Yeah, that's healthcare. This purple one here. Um, Precious metals that we talked about. We've got this pink line here is utilities. So those are the stuff at the lower end. On the top end, we had, like we said, discretionary spending. We've got this red line up here. This is communications, which would be your your Verizon, your AT&T, but also Meta and Google are categorized as communications companies from the S&P sector point of view. And then the green one is the financial sector. So discretionary spending, communications, finance, those are the top end versus the stuff we talked about at the bottom end. Um, this kind of light blue teal line right here, this is XLK, which is your tech. I would have expected that to be higher, but remember we went through um, we were still going through a lot of pushing with a lot of the AI stuff and NVIDIA, and then that kind of came down over the past uh, in the past couple of months. So that's what's leveled that out over the last quarter. Obviously, if we zoomed out, like if I zoom this whole thing out and go a lot further, um, even down to the beginning of 2024, and you see all these change because how things moved over the last quarter is it doesn't define how it moved over the last year. So we see some big differences between some of those. Um, so yeah, for me, it's always important to have a little bit of an idea about what sectors are performing best, what sectors are performing worst. Um, it's also good to see the areas where there is transition, where maybe an underperforming sector starts to pick up. And we see that happen when we get sector rotations, where investors kind of feel that a particular sector has been drying out. They've made a lot of big progress in it, but now things are starting to um, they're they're starting to go stale. And so they'll rotate into another sector that's starting to look a little more promising. Some of the stuff is seasonal, but a lot of it is just driven by manufacturing cycles, really. Um, so the last thing that I wanted to look at, let me set this template back. There we go. There we go. So the last thing I wanted to look at as a representation, I wanted to take a look at Bitcoin just to talk about crypto in general. Um, so obviously Bitcoin has been doing very, very well. There are two things about it that are worth taking note of. The first one is I'm gonna pull up a weekly chart for this. I'm gonna back up a bunch. Previously, when we'd gone through areas of like halving situations where I won't even get into the explanation about it. If you know crypto and you know about halvings, then you know that generally there would be spikes after that happened, and then there'd be uh, big crashes. Not I don't want to call them crashes, but a lot of pullback, and then you'd have slow movement, kind of like what we saw here, drop down and then a slow push back up. Um, what we're seeing now over the past few years is that that's starting to mellow out. It's starting to normalize a little bit. And a lot of that is because over the past couple of years, we've started to see institutional investment coming into it. And what that's really doing is it's starting to add a lot more liquidity, and not just liquidity, but regular liquidity into cryptocurrencies. And that helps smooth out the volatility. It could still be volatile. It could still push really hard and move up really fast or move down really fast. But generally, those movements are smoother now than they had been in the past. And the other thing about it is, as we see institutional investments coming into it, cryptocurrency generally is something that people aren't people aren't buying and selling it a lot. People tend to get into it and hold on to it for a while. It's not like it's not like Apple where you held it for a while and then all of a sudden they came out with their earnings report and it sounded really, really bad. So you said, ooh, I don't know how they're going to do over the next year because they don't seem to be in line with the kind of sales they're going to need to keep the price up. And so I'm going to take my money out. That's not happening with cryptocurrency. It's a lot of buy and hold in there. So as we see more institutions coming in, I expect that that's going to continue where it will start to hold levels and you won't see it drop down below those levels anymore. where previously it used to be you'd get a big spike up, a big spike down, not all the way down, but then, slow rise. And that's happened at several points. And then I think there was a small period where Bitcoin in particular, not necessarily all of crypto, but for people that were kind of worried about what's going on in the market, there were some people who were saying, hey, like we used to go to gold, we could go into some of this crypto stuff. And that was happening for a bit, but now what I think we're seeing is that cryptocurrencies are starting to move more with the market and not so much against it. Not against it's probably the wrong way of looking at it, but um, if people are looking for a safe haven from being in the market, they're also looking for a safe haven from being in Bitcoin. And like I said before, I think a lot of that is attributed to institutional investing and the creation, not just the institutions doing it, but the creation of ETFs for cryptocurrency that is adding to that. Um, so that's everything I've got as far as what's going on with the market. Like I said, my big picture view on it is I am bullish. I started off, let me back up just a little bit. So at the end of 2022, near the end of 2022, everything was there was all the quantitative easing and money was piling into the market and everybody was getting rich and it was fantastic. We hit that point where Jerome Powell said, hey, we're going to stop the quantitative easing. Not only that, but we're actually going to start quantitative tightening at some point very, very soon. And there was a big pullback on the market as institutions got out of the riskier stuff, moved their money around, and there was a pullback for a while. And so at that point, I made the switch because we sort of anticipated that was coming. We made the switch and then I said, I'm putting everything into gold, but not just gold, but precious metals. Because Powell had said that they were going to continue quantitative tightening, which they're doing now. They said they're going to continue that until at least January of 2024. And so my goal had always been to hold on to precious metals until 2024, and then I would reallocate. But at the time, gold was doing really, really well. Here we are going into the start of 2024, and things were all rising. And so as we got into the summer and stuff, and we started thinking more and more about the election, I changed my mind and said, I am going to wait until after the election and then I will reallocate. But I did sell just before the election. Actually, this line down here, this was the line that, oh, here it is right here. This is where I originally bought. And then this is where I sold. Yeah, somewhere in here. Obviously, you can see it's gone much higher since then. Um, but that's where I am now. And I feel that good about where I think the market's going to go over the next year that I've got my list of what I'm looking to invest in. Some of it I've started to. I'm waiting for the right opportunities, the right setups. Like I said before, we could see things like Russian oil might make oil companies drop for a while. And so on the rebound, there might be opportunities to pick up what I want from there because I have a few like ExxonMobil. Actually, ExxonMobil might be the only oil company I have in here. But yeah, my point is, my plan was not just to once the election's over that I'm just going to plop everything back in and just buy right away. It was take this year to wait out the opportunities and get in where I can. This is long-term investment for holding for a long period, like years and years. So I'm not, I don't have to be too picky about it. And even in some cases, I'm seeing pullback in some stuff. I'm not too worried about it because these are companies that I feel that 3 to 5 years from now, no matter what happens, they're going to look pretty good. So anyway, yeah, I'm going through that now because I have confidence that um, we're going to see the market continuing up this year. Um, so I do have two questions on here. The first one was, how do I determine, I'm assuming TP is target price. Just want to confirm that for me. We'll assume it's target price. So that's really going to depend on the type of trading that I'm, oh, take profit. Okay. Um, very simply, let me switch over to a different chart. Oh, if I can get that to stop doing that. Here we go. We'll just pull this up. So this example, I'm using intraday trading. This is what my chart normally looks like. Sorry, it is a little bit messy. Um, I'll get rid of a little bit of stuff that isn't absolutely necessary. Feel like something's. Oh yeah, this was this morning. Okay, yeah, okay, we're good. So I end up having different levels, as you can see here, different areas, and when I talk about those areas of support and resistance, um, when I go through and look at these, a lot of those levels become the areas that I'm looking at, and the generally they're steps, right? So as an example, this was a trade that I took today, where I was looking for the start of this wave three. So um, part of what I teach in charting and indicators, as well as the advanced charting and indicators courses, is I talk about um, trading within waves and taking waves that are moving along with the trend. And so, because of how that sets up, if you're counting through these waves being, this first wave up is wave number one, the next one coming back down is wave number two, this next move is wave number three. And as long as they continue in a pattern, in this case of making higher highs and higher lows, we're now moving in a trend. And so we keep counting those. And eventually that will turn around, excuse me, in some cases in a small part, where you'll start trending the other way. So we get a bearish trend along with it. But while it's moving in that trend, um, one of the things I always talk about is waves 3 and 5. Those are generally my favorite waves to trade, because when wave three starts, it's a confirmation that we're actually playing with a trend. Same thing with wave five. And there's a lot of reasoning behind it. Um, but just looking at wave number three, the fact that you move from a lower point up, you come back down to a higher low, meaning that the sellers couldn't push it any further down, and they couldn't get it back to where it started from. And now the buyers are already taking over again. That's what I mean about playing with that trend, because now it's really showing that on a larger scale, beyond just this one little wave we had, on a larger scale, um, your the that your buyers are building the trend, and that's what we want to play with. So in this case, when for this particular trade, what I look at is I know I've got these areas of resistance, and so I'll generally mark those as my target. Now, because we're playing options and this is day trading we're talking about, there's a lot of risk in there, and so sometimes to get to that target, it could mean that you'd have to hold through some pretty nasty pullbacks. So generally, the way I set my price target is to start off with these levels. So when I took this trade as an example, um, I can tell you that the actual entry point for this trade was here. I know a lot of this has, when you look at the full move that we had from the bottom to the top, um, when you see this wave three, you look at it and say, wow, that was a really, really big move. But the reality was we don't recognize that move until here. Still, I'm looking at this area up here because that was the next zone that I needed to watch for. So that's where I set my initial target. And generally my thought process is this. I'll say, okay, that's where my target is. If the price gets to there and still has a lot of momentum and just starts pushing through it, I will start setting some targets above that. But for now, that is my base target that I'm starting. And once I get in and I start making profit, I'm always going to have a trailing stop. So, for instance, once I get into a trade, if I get up high enough that that I'm up about 10% on the trade, at that point I'll say, well, now if this comes all the way back down to my entry price, I will not take a loss on it. I will just close it at even. If the price moves up to 20%, um, then that trailing stop, I might move that up to the 10% mark, saying, okay, if this pulls back now, I'm not going to take any less than 10%. So I have those trailing stops. I have my target, but I also have an initial profit target. And for me, that's usually about 20%. So if the price moves up enough that I'm at 20% profit, I will take partial profit at that point. Again, this is personal play style, but that way I always feel more comfortable if I've locked something in like that, because that means now I've got money in the bank. I know I've got something. And even if the price comes all the way back down to my entry point and I have to close the rest of them at my entry, I've still got some profit in my pocket. So that's basically how I set my where I'm taking profit. Let's see. Can we please take a look at Tesla chart? Yeah, we can pop back over there. Throw up Tesla. Tesla is one of the ones that's on my long-term investment list. I'm just waiting for the right opportunity. Initially, let me go to a smaller time frame here. So initially, when this was all coming back down, I was watching this area. Remember what I talked about with SPY, where I said, as it comes back, I have different zones that I'm looking at. And when it hits those zones, I'm looking to see if it will bounce. And if it can bounce back up off that zone, now I know that zone has become support. And so that's where I'll get it. So I was watching, we almost had it right here. But I'm watching this as it's coming down. And it didn't ever end up bouncing in this zone. And in fact, it broke through it. And once that happens, this area that I was expecting to be support has been broken, so it wasn't support. Now the price is coming back up and it's testing it again in here. And so my concern now is that this support zone is now going to turn into resistance. And that after moving up, it's just going to reject somewhere around here and then come back down here. If this happens, then I'll be looking for this to push down a little bit further, maybe back down to this next level of support. Um, if that doesn't happen, well, sorry, I have to throw these in as well. I'm not going to get into trying to explain multi-time frame trading, but these lines that you see it's an indicator I created called cycle point. And what it does is it gives me the um, the cycle transition area for various time frames. So if the price crosses above these lines, that means that those particular time frames have now entered into bullish cycles. If it crosses below those lines, it means those time frames have crossed into bearish cycles. And what I generally look for is areas where close together, it crosses both those lines, meaning that two different cycles have started in the same direction at the same time. And that generally creates more momentum for the movement. That's kind of the theory behind AC&I. And the nice part about cycle point is that it's not a reactive indicator. You're not waiting for something to happen and reacting to it. Because the lines are plotting, you can always say, oh, for that to happen, I know the price needs to get there. So now I'm being proactive about determining where that change is going to happen. So it crossed over one of them while it was very far away from the other. And that to me is not what I call a high probability entry, because the first one that crossed over is now it's playing out for a while, so it starts to get exhausted. And by the time it crosses the second one, the first one may be exhausted and ready to turn back. So we could see this come down, and if it crosses both of those down, then I'll actually look to short Tesla. Um, if that doesn't happen, the other scenario that I'd be looking for, because remember, big picture, I want to get back into this. I want this to be moving up for long-term investment. So what I'm going to look for on the other side is I need this to actually continue up above this zone that we were in. And like it did the other way, or like we're looking for it to do the other way, I would need it to come back down, retest that zone as support, and then start back up again. Well, if you think about what I just explained to you here, where it comes back, where it goes up, comes back down, and then tries to go back up again, that's going to create. Let me do this way. Here we go. Up to here. Well, actually, we were saying get a little higher up to here, pull back, and now you've got that wave three starting. Label's a little bit different than what I use the other way, but so yeah, that would be that start of a new trend back to the upside, that wave three that I really like to take, and that would give me a good setup, and that would be the area um, where I would look at buying Tesla stocks, because my long-term investing stuff is more about stocks, less about options. I might get some leaps in there, but some of the stuff I'm thinking holding 5, 10 years or so. So not really something you can do with options. Or I mean, you could, but you'd have to rotate them out pretty often. Um, and so, going back to what I was saying about cycle point, this yellow line that's up here, this is actually the weekly. When I talk about time frames, this is the cycle point for the weekly time frame, meaning that right now we're in see this yellow line on the weekly chart, we're in a bearish cycle. And before I would want to buy that again, I would need the price to cross back above that yellow line. But that's for long-term hold. For the other one that I talked about, this shorter move, up here, down and back, this is something that I would be looking shorter time frames. I would get options for a swing and take it that way. But yeah, those are the two scenarios that I'm waiting for. Technically, three scenarios that I'm waiting for on Tesla. Um, yeah, so for the live trading, and I can go back to this one that you were asking about, Steve. So remember, I talked about how, the price had moved all the way up to here before we got confirmation that this was an entry, and it doesn't look like much, but in reality, remember I said that I had my target here. So I took this trade from this point, got it up to, this is where I ended up exiting because it started to pull back a little bit over here. And I wasn't sure if it was going to reject this zone and come back down. So because that was my target, I exited. Now this was, just let me add price range. There we go. Yeah, so this whole thing only moved 60 cents, but the trade ended up being about 40% profit. I'll have to go back and double check it, but yeah, because that was the second one that I took. That was about 40% profit that I got at it. For that small move, that's pretty good. Pretty happy with that. And then we had opportunities to um, continue playing it up with those waves. You can see that we continued on. There was a wave five. At this point where I'm in this bullish trend, all I'm looking for is continuation of that bullish trend. And I always, in the AC&I live chat, I always talk to people about playing with the trend until you start seeing signs of trend reversal. And so we have, there's usually about four key signs that we look for. By the time you see about two of those signs, you probably stop playing with the trend. Once you get into three or four of those signs, you actually start playing the opposite direction. So, as an example, without, well, let's just put this back in. Yeah. So, I would have been, by the time we got to here and this pulled back, wouldn't have taken this particular trade. A couple of reasons that one of them also being that we're getting into lunchtime, but then this trade we could take down, and that's another reasonably good move. Probably would have returned, 40% or more at that point. Um, but yeah, that's about the quickest example I can give of generally what we go through. And we in the we'll I'll when I'm looking for this stuff, I will generally post charts and in the ACNI chat and talk about it, or during the live trading. Obviously, people are watching me do it live, and I'll talk about here's the entry I'm looking for, where we're getting in, that sort of thing, where I'm getting in. So what else we got up here? Review GEO. I'm not familiar with GEO, but let's take a look. Just gonna add a couple more things in here just so I get a good big picture of what's going on here. So yeah, like I said, well, it's a REIT, so I'm assuming commercial real estate. Um, so it obviously hit a high point back here in around the 21st of January. It has been pulling back, but the same sort of stuff that I talked about with SPY and those other things. For now, all I'm seeing is an opportunity. It's pulling back, giving an opportunity to continue up. So one of the things that I also talk about in AC&I is these zones where we've got the upper zone, the lower zone. Let me clear a few things out just so you can really see what I'm talking about. These orange zones here, you can see that the zones as a whole, they're all sloping to the upside. And so when price gets back inside, when we're in a bullish trend and the zones are trending to the bullish side, when they come back to that midpoint, there's a higher probability oh, private prisons. Okay. Oh, I knew that. Um, when the price gets to that midpoint, when those zones are trending up, there's a higher probability that you'll get a bounce around that midpoint for continuation to the upside. So I would be looking in this area for signs that we're potentially going to start heading back up. Um, we're actually very, very close to getting that. Um, so you can see, I'm just throwing in the wave counter here so you could see here was our bearish trend coming down. We're still technically in a bearish trend. Um, so from a more risky perspective, if the price uh, by noon tomorrow, if the price is about here, about 27.85 in that space, if the price is above that area by noon tomorrow, that would be my signal to that would be the trigger I'd be looking for to take this to the upside. Um, but remember, we're in a bearish trend on these smaller time frames. On the really big time frames, we're in a bullish trend. Um, But if I wanted more confirmation of that before I wanted to take this up, then probably what I'd do instead is um, wait for this. I don't know why that didn't draw. Here we go. Wait for this to move up a little bit further, come back down, and if we get that higher low for that wave three, that would be a better, less risky entry point to take this to continue to the upside. Other than that, so as you move through a trend, the more waves you get, you start getting diminishing returns on those waves. So beyond wave seven, the moves that you get are generally smaller. Not always, but in general, that's what we expect. So if this ends up being a full rejection and this came back down below this green zone, um, I guess what I'd be looking for if I was wanting to continue to the downside, I'd be waiting for that to break through, come back up and retest it as resistance, and then come back down. And those would be, depending on which way you want to go with this, those would be the two setups that I'd be looking for. And you'll notice I'm on the 4 hour time frame. We're talking about, I'm assuming that we're looking for kind of a swing trade, something that you're going to hold for a couple of days or a couple of weeks, something like that. And so the time frame that I'm looking at, generally, what I want to use is I want to use the daily time frame for these, but I actually use the 4 hour chart as a proxy for the daily because it gives me a little more granular information about what's going on, and sometimes I can capture a trade a little bit early or get a little bit better timing on the entries by using the 4 hour as my proxy. Again, this is personal preference. Um, but just so you're aware of what I'm making my decisions on. Because if you play in a slightly different time frame, you just need to have that in mind and adjust to whatever time frame that you're using. SOUN. Oh, Soundhound. I didn't know that they were public. Interesting. Yeah, so this has been coming down since well, since the beginning of the year. Looks similar to what we've seen with a lot of other stuff. It's gotten down to this purple zone, this monthly time frame. It's been breaking out that support just a little bit. If it completely bounced here and started coming back up, I'd still consider it holding that zone, meaning that it bounced off it. I wouldn't see that as a breakthrough because it stayed very close and we're not getting multiple candles out the other side. So if it could come back up now, the setup for the setup for the bullish situation on this isn't what I'd consider ripe because remember I talked about these lines and I would want them closer together. They're kind of far apart right now. So I would either need the price to continue consolidating sideways, kind of in this space, without getting um, without moving down below this purple area, and I guess this green zone that's also support. As long as it didn't break out under those and moved a little bit sideways until this line could come down and get closer, so it could sort of move back up and cross both those lines together. That would be where I'd be looking to take an entry, or the other one would be like we've been saying, have the price come up, pull back, and then re-enter on the bounce using one of these areas as support. That's what I'd look for if I wanted to get in on the bullish side of things. If I'm anticipating that the price is going to continue down or that bearish trade is what I'm looking for, um, then I'd still look for this to come up, maybe not get very far, and then turn back down, ideally without escaping outside the top of this purple zone to essentially start wave number 9 in the trend to continue to the downside. As far as um, NVIDIA and their CEO selling a position or anything, I personally I don't know anything about it. Uh, the live sessions, I do live trading for at least 2 hours every Tuesday and Thursday. Um, Generally, I start at 10 and go until at least noon. Sometimes if there's opportunity looks pretty close, then we'll stay a little bit longer. And something I'm looking at is the potential of maybe doing something in the afternoons as well, or changing it to the afternoons. Sometimes there's some good opportunities that set up in the afternoons that we kind of miss. Like we still catch them in the AC&I chat, so we talk about those there. But um, sometimes between 10 and noon, um, if we don't get a move in there, sometimes things get a little bit slow. So I'm always looking for options, different areas that we could trade. I would like to find a way to be able to move it out. Also, the time isn't always ideal for people. I'm looking at the possibility of an alternate time that other people could take advantage of. But for now, 10 till 12 Eastern on Tuesdays and Thursdays. Hunter wanted me to take a look at, I don't know why I started typing Hunter instead of NVIDIA. Okay, so let's just clean this up a little bit. Remember when I talked about Tesla and how Tesla had come down and hit that purple zone, and I was looking for it to bounce off that purple zone so that I could start playing it to the upside. Well, that's exactly what NVIDIA has done. Now, since then, also notice this is where I actually bought right there actually. Um, because I thought this was going to be the bounce. Anyway, um, at this point, we've moved up to an area, this zone here of resistance. What I'm looking for is for this to come back down, make a higher low, and start wave number 5. Um, this would be ideal because you'd be moving with the trend. The only thing is you do have this resistance, and it might be that that resistance is as far as it's going to go, and it's ready to turn around and start going back down again. You're not going to know what it's going to do until you get to that point. I mean, it really could do anything. It could just shoot right up and continue to the upside without ever pulling back like I'm looking for. But the two scenarios where I would want to go along with this would be either A, it does this, or B, if it actually doesn't drop, continues up, then pulls back and uses this green zone as support so that it can start a new, so that basically it would still be wave 5, but it would be wave 5 up here instead of down here. Those would be the two scenarios I'd be looking for to take it on a bullish move. For a bearish setup, that one gets a little more complicated. We'd have to move to a different time frame. And I'd be looking at it from this point of view because on this larger time frame, this is the daily time frame, we're actually in a bearish trend. So what I'd be looking for, if I wanted to take it down on the daily time frame, I'd be looking for a new cycle to start here, where we completely reject this. We get a setup not just um, on the 4 hour. I was looking at smaller, like some smaller time frames, cycle starting. In this case, I'm looking on the daily chart for a bigger time frame, the daily time frame to start a bearish cycle, the daily chart to start a bearish cycle. If it does that while it's rejecting off of this zone, then I'd be looking to take it down. If, like I said, if down is the direction you're looking to take this. But we did get this bounce off of here. So my point of view would be I'm still looking for um, bullish moves with the trend, and that would be my preference. And I'm also long-term long on it, so I want NVIDIA to go up either way. Indicators do I use for TradingView? At this point, every indicator that I use is custom. They're all indicators that I've built myself. Now, some of them are built off of or with a foundation in some of the more common indicators. Like I actually use a MACD, although it's modified. I use MACD down here. But the other indicators I use, the MTFK indicator, which is giving me these zones, the HHLL indicator, which is counting these waves for me, the cycle point indicator, which is telling me the areas where those cycles start. All of these were custom made by me. And that's what we use um, in the AC&I course. Uh, these are the indicators. They are part of the course. They come with the course, and or at least the basic versions of them come with the course, uh, so that people can use them with the strategy, so that they can trade this way. Let's see. Can you look at Microsoft? So Microsoft at a point earlier or midway into last year, Microsoft was at that same point where it was coming back down to that purple zone, and I was looking for a bounce. It didn't give it. It broke under, and you can see that ever since it has been pushing back up into that zone, and it's having trouble breaching it and continuing back out the other side. Um, a big part of the reason why they moved up very quickly was because it came out when all the AI stuff came out. One of the first things that helped reveal that information was Microsoft saying that, oh yeah, we've actually put a bunch of money into OpenAI. And then it was like overnight they released ChatGPT and everybody jumped on it, and then people started going nuts about it. And almost immediately Microsoft said, oh yeah, by the way, we've got this new thing called Copilot, that's Chat GPT for Microsoft products, and it's built into all of our tools. And so they were pushing along with NVIDIA and all these others, running up higher. They've since, things kind of died down. And also, I think they've seen a bit of impact because when they were first, that was great. But now everybody's developing their own AI tools. You could be using ChatGPT, which they sort of expected. You could be using their Copilot. You've got Gemini, you've got DeepThink, and then there are all these other, like those are just the big generic ones. Then you've got all these little subdivisions into like niche markets for AI, where they've now got um, their model is tuned to, particular services, stuff for doing images, stuff for doing music, um, just about anything that you want to do now, you've got AI for. I even every morning I go through and I write up a morning analysis that I post for the AC&I group. I go through and I look at SPY on the big picture and say, here's what we're seeing for big picture. Here's my targets where I think we could get to today. And then I do an intraday analysis saying, okay, and here's how I think the morning's going to go. Here's the plays that I think are going to get set up. I do all that in a morning analysis with charts. And what I've gotten into the habit of doing now is I will I'll post it into, well, I use Gemini, which is Google's AI. I use Gemini because it it remembers information within a prompt. So if you start up a prompt, a specific one, and you start telling it things within that prompt, you can tell it to remember things where like Copilot does not. And so certain things like every time I write CP for cycle point, I wanted Gemini to remember that. So I just told it at the beginning of my prompt, I just said, here's some stuff I want you to remember when I talk about when I say things like the 4 hour top, what I'm talking about is this top channel. When I say CP, I'm talking about cycle point. And I gave it all these definitions that it remembers. So now I, still tired in the morning, go through my analysis and type it up. And sometimes I'm not very clear, but then I turn around and ask Gemini to rewrite it for me. Let me see if I can find a quick example. I'll do it this way so that you can. Okay, so I'll show you this first part. So this was basically what I typed up. Oh no, it's going to put the whole thing like, oh, it's horrible. Okay, it's a little bit hard to read in this space. I know this is going to be a horrible example, and you guys don't need to see this. But basically, it said SPY made a new all-time high in the pre-market. It's above the 4 hour and daily CPs, so bias remains bullish. The daily top is too close to be a reasonable target, so we're using the weekly at 615.25. The bear target is the 4 hour mid at 606.75. Um, then I said there's talk about Trump speaking today, but I haven't seen anything confirmed. And there's a few other things in there. Now, compare that to how it gets redone by AI. And specifically, I always tell it to use a friendly conversational tone. I don't want it too professional. I don't want it too casual. And this hit the sweet spot of sounding the most like me that I can when I normally talk. Um, so you see here, same stuff, but what it said was SPY just hit a new all-time high, and then it puts the abbreviation in, so you know what we're talking about. In the pre-market, it's holding above the 4 hour and daily cycle points, so the bias is still bullish. The daily top is too close to the current price to be a good target, so we're looking at the weekly top at 615.25. Notice it put in the dollar sign and things like that as well. On the downside, we're watching the 4 hour midpoint at 606.75 as the potential bearish target. So it's really cleaning up. And it also uses words like there's been some chatter about Trump possibly speaking today. So it's very conversational, like I wanted, but it cleans it up because sometimes I repeat words and make a mess. Um, anyway, the point to all that was that um, Microsoft has seen a little bit more of a hit because of some of the changes that have happened more recently in AI compared to um, NVIDIA, because at the end of the day, right now, NVIDIA is pretty much the only game in town when it comes to chips. Now that will eventually change, but they're not seeing the same level of impact. Um, So yeah, it's kind of moving. You see how it's kind of moving sideways in this area? That's what I'd be watching for is continuation of that until it moves out. Until it kind of moves out of this zone. I don't know how clear that is to see that it's kind of a horrible color. Um, but yeah, I'd just be looking for it to continue bouncing until I started seeing it moving out of that zone. Really, what that means is these um, the orange zones that you see here. I'd be just playing it back and forth between the two until it breaks out one side or the other. Let's see, where are you posting the daily analysis? I don't see it in the AC&I trading chat. Let me pull that up really quick. Now, let's put this right here. So this is the AC&I chat. That's um, the after you take the course, you can get this with a subscription, where we basically people talk all day in here. If this is the one you mean, because there is another one, there's another chat that's specifically for people that took the course so that they can ask questions about the course material and we can make sure everybody understands things properly. But I mean, I'll have to go up quite a bit, but let me find the time already. 11 o'clock. There we go. So this is there's what I posted today. And of course, you can click on these to blow them up so you can see what the charts look like, stuff like that. But I always post these around somewhere between 8:30 and I try to make it 8:30, 8:45. So this one's the bigger picture, talking about the bigger picture time frame, and then down here we were talking about what I'm sort of expecting for the morning. PLTR. Yeah, so charting and indicators, that was the first course that I did. And you know, uh, with everything that I had, everything I'd been learning, that I built that course out. And then once I got that done, as I evolved in what I was doing and looked at certain things I wanted to change to do things better, eventually that led to creating AC&I, which is sort of the next step. It's some of the stuff it does, it's similar. The concepts are similar, and you actually need CNI to take ACNI, um, to get an understanding of what we're doing. Um, but the best way I can explain it is that where what you're doing in CNI is reactionary, you're waiting for your indicators to tell you that it's time to do something. When you switch to ACNI, now um, it becomes just totally forgot the word I was looking for. It's more predictive, where now you're looking at it and saying it looks like the entry point's going to happen about here. So now I just have to wait for that to happen. So it's more like you could see the change coming, see the setup coming versus waiting for it to tell you that now's the time. Okay, so PLTR, which has been on an absolute tear. I don't know if there's any sort of catalyst for the big pullback that it had. Oh, okay. That would explain it. Um, yeah, they've certainly, as far as their technology and stuff, there's a lot that they've been doing that has been it's been doing very well. I remember hearing the CEO talk, and it was like they never really talk about exactly what it is that they do as far as their software, but if you heard the CEO talk, he actually mentioned um, I don't remember the exact words that he used, but he talked about, sometimes our customers have to kill their enemies. which which seemed like such a weird thing to say, despite whatever you're saw. Obviously some people are working in defense and stuff, and that is a true statement. Sometimes you have to kill your enemies. But it just came off so like out of the blue when he said it at the time. It's pretty funny. And when you think of them as, a tech company that's kind of working in software, those aren't words that you would expect to hear from the CEO. So it looks like the Pentagon has been talking about an overall budget cut. Looks like 8%, and of course that's going to affect all of their contracts. Except maybe those Tesla contracts, apparently. Um, Other than that, if that doesn't have an effect on it, then I don't see why this wouldn't continue. Like I said, everything's been all up and up for them until this particular thing. And this has nothing to do with them specifically. It it's information that's coming from uh, changes that are obviously outside of their control entirely. If they even happen that way, they may not be impacted. So definitely from this position where it's at right now, I don't see any sort of entry point either way. Um, Generally, when we're so these the orange zone here, this is based on a weekly time frame. It's very big long-term stuff. Generally, when the price is above that orange area, my my outlook is always don't short when you're above that area. Look for bounces to continue the movement up. Wait until wait until price comes back down in that area, tests it as resistance. When something like that happens, now I'm potentially looking for short positions. But while we're above that orange zone, I'd just be looking for places for it to bounce and head back up again. In this particular case, this may mean that you might be waiting for quite some time. Oh, and it looks like Steve was also posting, a couple of people are posting about the fact the CEO sold a lot of shares. Looks like altogether they sold about $3 billion. Yeah, so they knew what was coming. Let's see. So I think I've got everybody on there. We've been going for about an hour and a half, so I guess we could probably call it a night here. Obviously, if you guys have any questions about this stuff, if you have questions about, the courses, AC&I or CNI or anything, um, hit Steve up. He's mentioning something about chat. Oh yeah, he's got a bunch of stuff posted in chat. If you go into the gold chat right now and take a look. Several things that he's been talking about in there. But like I said, if you've got specific questions, if it's about any of the courses or anything, talk to Steve about it. He can hook you up. If you have questions about anything else that I talked about tonight, any of the techniques that I'm using, if you've got other stocks that you're interested in, you want some input, you can always hit me up. Just talk to me in chat. Okay, so thanks everybody. I guess that's it for tonight, and we will talk to you soon.